Hi there, Chris Hasenberg here with an economic update for the spring of 2020. First of all, I want to thank you for watching this video. Normally we would be meeting face-to-face at the Eagles Club up in Halley or Adventures Restaurant up in Rice Lake, but unfortunately with today's times we can't. So I decided to record this information for you to watch at home. A couple things that I'd like to cover today. One is an investor update, and two, I want to talk a little bit about the CARES Act, and I also want to give you some different planning ideas and some strategies. First and foremost, the most important thing for you is to stay safe and stay positive. And I know if you are anything like me, I'm badly in need of a haircut. It's been 2 months, which is a month longer than I've ever gone without a haircut, I think. And I know I'm playing an awful lot of cribbage with my wife and so on. I was joking with a client the other day that's saying, I got a feeling over the next 9 months we're going to see a lot of births and a lot of divorces, and so I hope you guys are on the happy end of that spectrum. So anyway, moving forward, equity market review. 2019 was a healthy year for investors in the stock market, and 2020 started strong. However, things changed, and things changed quickly. And I know this might be a little hard to see, but I'm going to share with you that over 90% of the assets here at Hasenberg Financial Group are in our investment advisory managed platform. And coming into the beginning of the year, we were the equity portion of our investment portfolios were 100% into the equity markets. And as early as February 3rd, our first short-term signals started to change. And at that point, we took 15% of our, sold 15% of our equities and put them into fixed income. And then on March 2nd, when things, volatility started to kick in and we started hearing more and more about the coronavirus and so on, we took and reduced our equity exposure from 85% down to 65%. Just 2 days later, 3 days later, on the 5th of March, we brought that down to 55%. And on the 12th of March, when President Trump declared it a national emergency, and right as the World Health Organization was calling it a worldwide pandemic, we did sell 100% of our equities out of the market. And from there, the market did continue to retreat and retreated another 7 or 8% from there. As it started to come back on the 25th of March, we put our toes back into the water a little bit, and we put 15% of our cash that was sitting there back into equities. And as of the 30th of March, we got it as high as, we got it up to 40% of the accounts were into the equity markets. And as of the 7th of April, we got up to 60% of the equity markets. As of this recording, the S&P is right around 2780 and so on. So as you can see, we made a lot of adjustments and changes and throughout the month of March. And in fact, the month of March was had six of the highest point gains in the history of the Dow Jones, but it also had 6 of the highest point losses of the Dow Jones. And so, as you can see, we've had a lot of volatility, and we've been making adjustments as we go. Now, interestingly, our 12-month rolling totals on our investment portfolios, we do have a good amount of outperformance, and in fact, year to date, we do have a good amount of outperformance. And so I'm pleased with how things are going for right now. Of the equity portions of your portfolios, we're sitting roughly around 60% in equities. And so the fixed income markets have been adjusting also. The Fed has lowered interest rates. I know this chart is hard to see on the video, but this goes back to 2006 and 7 and how rates came up and then they came down, and how they had bottomed between 2008 and then They started raising rates here in 2018, and these are scheduled rate drops. Then on March 3rd, the Fed made an emergency unscheduled decision to drop rates. On March 15th, they dropped rates again, so we're back down to the levels that we were back for several years during the recovery after the 2008 bubble. The oil prices, as we know, have dropped. Of course, well, maybe you don't. If you haven't been driving, you may not have seen the gas prices. I've seen it as low as down by my parents' house is 89 cents a gallon. So it's crazy. I saw, I think, on $1.24 on the way here into the office this morning and so on. So obviously the oil prices have changed, but that's put an upheaval in the energy industry and so on. And I'm sharing all of this with you because knowledge is power. And we've found that my clients who are focused on the long term and are more successful and so on. And I want to just talk a little bit. Do you remember 2008? 2008, the market had obviously a large correction with the housing bubble, and in fact it started in October of 07 and went through March of 09, and during that period of time the stock market fell roughly 57% over that year and a half, and during that period of time unemployment rates doubled during that period of time. Now, interestingly with that, it took almost 10 years to get the unemployment rate back to where it was in 2007, and went all the way till 2017 before we got back to those rates in 2007, and it only took 4.5 years or so for the stock market to get back to hitting new highs. Now, again, I say only, but that does feel like a long period of time, but realize that the stock market tends to react faster than the economy. Just like what we've seen here, maybe the stock market has fallen faster than we've noticed. I mean, obviously we're seeing unemployment rates creeping up and so on. But my point is that the market in the past, which again, the past has no dictation on the future, but in the past, the market tends to be a leading indicator, and it can fall faster than the economy, but it can also recover faster than the economy, and so on. And who knows, we might spend the next 20 years digging out the next 2 months of spending that the government has gone through and done, and so on. And so I just wanted to kind of point that out and to keep some of that into perspective. And one of the things that I get is a lot of people are asking me, Chris, what do you think is going to happen? And a lot of people are suggesting that we're going to have somewhat of a U-shaped recovery to the market. And really where the really question becomes, where on this U are we? Are we... some people think we're in the middle of this left side of the U, and we still have much further to go. Some people think that we have flattened and bottomed out. And in fact, some people think we might have even started on the recovery and so on. And can I suggest that I've found that a lot of people think where we are on that U-shaped sort of recovery based on how much TV they're watching and how negative they are about the future and so on. I myself don't have any real good feelings and so on, but I have spent enough time doing this to realize that it's entirely possible that things could get worse before they get better and so on, because the corporate earnings are coming out, and they're coming out saying, you know, we had a bad month, the month of March, but they also then start giving guidance to what they think is going to happen here in the next quarter. And so that could have some very negative effects on the market, but it could be positive, which again, we don't know. And I'm not trying to scare you. I'm trying to prepare you, and that we want to be prepared, not scared. And so just kind of understand that we may not have, no one knows what's going to happen, but we are watching this every single day, and we're doing our best to take advantage of any sort of upticks that we can. Now, outside of the equity market review, the government has responded, and they have come up with the CARES Act. And the CARES Act is the Coronavirus Aid, Relief, and Economic Security Act. And of course, when most people think of that, they think of their $1,200 checks that they're receiving and so on. And can I suggest there's some other things to deal with it also? One is that the tax filing deadline is now July 15th, not April 15th. And so if you don't have your taxes done already, well, you probably knew about that, or if you did, you may not be as likely to file an extension. Interesting note on that is that the first quarterly estimates, if you make quarterly estimates, is also extended to July 15th, but the second quarter estimate, which is normally on June 15th, at this point is still June 15th. So if you do make quarterly estimates, the June 15th date is still intact, but your first quarter estimates aren't necessarily due until July 15th. Go figure, the government creates something like that. So that's one part of the CARES Act. Another one, and this is a big one, is that required minimum distributions have been suspended for 2020. You are not required to take money out of your retirement accounts for those of you that are over 70 and a half or 72 years old. And also for those of you that have inherited IRAs, you are not required to take money out of that this year for the year 2020. And so what's important about that, this year, for our first year, we started doing taxes for our clients and our clients only, and we did over 90 returns, and for every one of those clients, we've put together a tax map. And so this tax map is some really good information that helps us figure out if you are going to take required minimum distributions, whether you need to or not. Maybe there's better places we can get them. It shows us what, if we should be taking money out or not based on your tax situation and so on. So it's given us a lot of extra tools. And so I'm really proud of the fact that, like I said, we've had over 90, we've got over 90 returns done this year. And this is a very big tax question, is should we take our minimum distributions or not? And again, tax oriented. Next thing has to do with the Paycheck Protection Program, and that is if you're a small business owner, and especially if you have employees, I highly suggest that you contact your bank, your local credit union, or whoever you do your banking through, and contact the Small Business Loan Officer, because this Paycheck Protection Program is something that you definitely want to talk to them about. It might give you a relief on up to 2.5 months of your payroll and other expenses and so on. So definitely contact your local bank or credit union or wherever you work with to help you with that. So some ideas or strategies is can I tell you that as worried as I could be about the markets, our investment accounts, our retirement accounts, and so on, I'm truly more worried about you and making decisions. I've seen bad decisions in this sort of environment have a bigger impact on your life than the coronavirus and or the markets. And so just be careful what you watch, be careful what you read, be careful on your thought processes and stuff, because it is something that can make a bigger difference than anything. And so 2019, so in summary, 2019 produced some great returns. Extreme volatility has definitely reemerged. Your health should be your main priority and so on. But as we go through here, focus on your goals and focus on any concerns that you have, and feel free to bring that to us. And what you can expect from us is regular communication. I've been recording these on a weekly basis and so on, and so keep an eye on your emails and so on. I'm really looking forward to being able to meet face to face again. I miss you. And anyway, I would at this point our July meeting or our August meeting is still scheduled, but again, that may change. And so just kind of keep your eye out for on these updates and so on. And can I tell you that volatility can be scary? And again, I'm not trying to scare you, I'm trying to prepare you. And not everyone is fortunate enough to be hearing from their advisors, and not everyone has advisors. And so more than ever, People need our help. And so please feel free to forward this video on to your friends. Tell others we are here, we are open. I'm the only one in the office, but we are doing a lot of meetings via the Zoom meetings and video meetings and conferences and so on. And so again, more than ever, your friends, neighbors, and relatives need our help. So please tell them about us, and if you'd like, we're happy to reach out and help them and so on. So I can't thank you so much. I can't thank you enough for all of for your business and for all of the positive comments. In fact, one of the fun things I heard is if you don't like this video, tell your enemies, and if you really like this video, tell your friends, and so on. And so I thought that was kind of neat. But feel free to email back if there are any topics that you would like me to talk about going forward, anything in specific. Feel free to email me or hit the like button if you like these videos, and I'll definitely keep putting them together. So again, thank you so much for your business, and again, stay safe, stay healthy, and be well.